I have made millions of dollars over the past 7 years trading Forex with a 50% win rate. My win rate is no better than random chance, and I have still made F tons of money over my trading career. And in this video, I'm going to show you how and why. Before anything, I like to always back up my claims with results, because the one thing that social media lacks from a lot of gurus is actual, real results. So let's go ahead and take a look at my free Telegram channel, which is actually the first link in the description of this video that you can join immediately and see for yourself. A couple days ago, I took an account for the 6th time in a row from $50,000 to $100,000. And this took me about 4 months to do this. I started a $50,000 account. I grew it to $70,000 in profit minus the commissions and swaps. It was at $100 net equity. And I actually have the entire video of this entire account terminal trading history right here, and you can go see this for yourself. You can scroll through it. But whenever you go and start factoring in through every single trade that I took over the past 4 months to grow this account from $50,000 to $100,000 after commissions and swap fees, you will see that my statistical probability of winning a trade is no more than 50-50. And you might think to yourself that is pretty ridiculous. How can somebody who claims to be a millionaire trader, who has been trading live for free in this Telegram channel for 5 years, consistently make money trading, millions of dollars trading, with only a 50% win rate? I'm going to show you how. Now, I have courses that cost thousands of dollars, and you don't have to buy a damn course from me or anyone to learn what I'm going to teach you here in this video, because I'm literally going to teach it to you all for free. You do not have to do anything else. You do not have to learn any complicated systems. I have learned every trading system under the sun that's popular. And for me, the thing that has worked best for the past 7 years is to keep things simple and control risk. Let's talk about technical analysis as a form of risk control. All I use is support resistance. That is all you will see on every single chart that I have, is just support and resistance zones. I use support resistance, alerts, and then I watch what candles do whenever they get into these major support resistance areas. All price does is it either goes up or it goes down. That is all price does. It does not matter what your reasoning behind why you think price does what it does. It does not matter if you get to this decision with 50 different indicators or 50 different metrics of deciding and criteria of what you think is going to happen. All that objectively occurs in the chart, unless the asset goes sideways and stops trading, is that price will go up or it will go down. Those are the only two outcomes. It is a 50-50 thing. Technical analysis does not have value in any type of predictive power. You cannot predict where the market is going to go. I don't care who you are. People do not know which way the market is going to go. Even if you're right a high percentage of the time, you will not be right every time. Not even computer algorithms that trade for billionaire hedge funds are right every single time. The only way to be profitable in trading, from my personal experience, is to keep things simple and control risk. So let's talk about support resistance. Support resistance has no predictive power at all. So when you look at support resistance, don't look at it as something that I'm going to use to predict the market. Look at support resistance as a way of controlling risk. Let me give you an example. All I do is I draw support resistance zones on the daily and 4-hour time frame, and I actually share all of this stuff live in my free Telegram channel. I share literally all my setups, all my analysis, day-to-day trades, literally everything. I share it here in this free Telegram channel. It's the first link in the description. I've been doing this for the past 5 years for free, along with my paid products, showing people every single day that this stuff is still working. All you have to do is literally what I'm teaching you right now. I draw support resistance zones in the daily 4-hour, 1-hour time frames. I use everything in Confluence. And I just set 2 alerts at the zones, one at a resistance zone and one at a support zone. And all I do is I wait for price to get to one of these zones. Now, when price gets to one of these zones, one of two things are going to happen. Price is either going to move up or price is going to break the zone and move through it. In this case, down at a support zone. Now, you are going to be right about 50% of the time. And this is no better than random chance. It is no better than me just telling you go to a random currency pair and randomly enter a buy or sell order. It will go up or it will go down. You will either be right or you will be wrong. You will either make money or you will lose money, and your reasons for taking the trade do not matter. That is why I do not fixate on the 50% win rate. Sometimes it's even worse than that, and I still make money. It may sound counterintuitive for me to tell you, and I'm not making the case. I am asserting to you with evidence that you can go see for yourself right now, that even though I have a 50% win rate, I make money on 90% of setups, even when I'm wrong. And this is how. So let's just get straight to it. If you buy at a support zone, which we will illustrate using this horizontal blue arrow. I know this is super high production quality trading content. Blue arrow for a buy, red arrow for a sell. If you buy there at that zone and price moves up into profit, you make a profit. You can close it wherever you like. There's multiple ways to decide profit targets. I just close usually once I get a 1-to-1 from my initial risk. 1-to-1 risk reward ratio and a 50% win rate. That's literally it. So if it bounces, I'll close and I'll make profit. Cool. Now that'll happen half the time, and that'll happen very easily. Half the time. The other half the time it won't happen. So what do you do whenever you're wrong? Well, you can do whatever you want. I'm not giving you financial advice or suggesting you do anything specific. I'm just telling you what works for me. If price breaks the zone, I hedge, meaning I enter an equal and opposite position size. If this buy position here is a 0.69 lot size and it breaks the zone, I enter a sell for a 0.69 lot size. And if it goes down to the next zone, then I can do what's called managing a trade. So if I have pre-selected the risk parameters and told myself, if price moves from here on the chart and breaks the zone and goes below it, I want to be in no more than a $1,000 drawdown. I will hedge if it breaks below the zone, and I will stay in that hedge until price does what? Until it gets to the next zone. So let's say price breaks below this zone and I'm wrong. So I get hedged. It's a $1,000 hedged loss. The sell is moving into profit and the buy is moving into drawdown. However, since it's an equal and opposite position size, there is no additional profit or loss incurred aside from the swap fees and commissions if you hold it day to day. Aside from that, the P&L just does not fluctuate. You just stay like at the same loss that you were invalidated at. And if it goes to the next zone and it comes down here, for example, you can have an alert where price comes down here. What I will do is I will close the hedge order in profit, and then I will just simply add a buy in drawdown. Yes, I add to losing positions all the time, and I make millions of dollars doing this and have for the past 5 years doing this exact same thing, where I'm trading just support and resistance with various risk structures. And this is the most recent one I use because it works so freaking well because you don't even have to be right to make money, at least in my case. So I'll add to the losing position down here, same lot size as the first position. And then if price bounces up at this zone, which is a 50-50 chance that it will probably do that, you know, it's either going to break the zone or it's going to bounce at it. It's 50-50. It's one thing or the other. Price literally just goes up or down. Don't overthink it. I will close this buy in profit halfway between the two zones, and I'll close this buy at a loss halfway between the two zones. Now, what happens if I make, let's say, $2,000 profit on this buy, but I lose $2,000 on that buy and I close them at the same time? That is a net break-even scenario. So I have not lost any money on these two trades as long as it eventually bounces at some zone. In this case, it was the second zone. And meanwhile, while having taken a net break-even across those two buys on that basket of two trades, I also made a profit on the sell going down. So even though I thought this outcome would occur where it bounces at support, I can be completely wrong and still have a 50% win rate, meaning it'll bounce half the time and it won't bounce the other half the time. And yet I can still make money doing this. I use hedging and dollar cost averaging as a risk management structure to make money. The only reason I make money trading at all is because I have a unique risk management structure that's just very, very simple, and it controls risk and everything is contextually appropriate. A little bit of experience helps too. If you do this for a couple months and see it over and over again, it starts to become very intuitive. Now you may be asking, this is all fine and dandy, Nick, but what happens if price breaks that next zone? What would you do? Let's say, Nick, that you're in a buy right here at this zone. You thought price would go up, but it did not go up. Instead, it continued going down through the zone. What I do oftentimes is I'll put my original invalidation, and invalidation is just what I call a fancy word for saying it's where most people will put their stop loss. What I do is I like to have my invalidations really, really far. So in this case, this would be a 160 pip invalidation. That's how I'll calculate my position size. For me right now, I risk anywhere from $2,500 to $5,000 per trade. When I'm right, I make about $5,000 to $10,000 per trade. And when I'm wrong, I usually still make money. Not as much, but I still usually make money. And every now and then I take a break even or a small loss. And once in a blue moon, I take a big loss. That wipes out like maybe a week or two of trading profits. It sucks, but it's just statistical likelihood. 90% of the time, I come out in a net profit. And here's how. If price breaks this zone, and this risk right here, let's say is $5,000, that's 160 pips. If it pops up from the zone and goes to the next zone, 150 pips, I'll make just under $5,000. That's about a 1-to-1 risk reward. If it breaks below the zone, I will simply enter into a hedge order just under the zone. I will let price go wherever the hell it wants to go. If it does not go straight down to the next zone, it could just break below, then come back and retest this first zone. And as soon as it gets into the zone and my alert goes off that lets me know price is there at that zone, guess what I do? I simply close the initial buy order at break even and I leave the sell order open. And then if price bounces there as like a break and retest setup on the daily or 4 hour, if it bounces there and goes down to the next zone, well, cool, I make money. Keep in mind, if it is truly 50-50, if you suck that bad at trading, and I do, to where you literally have no better of a win rate than statistical, arbitrary, random chance, 50-50. Eventually, if you manage your trades appropriately, you will have a zone where price bounces at. It's just a matter of how many losing trades in a row generally happens before a winning trade. When it's 50-50, you'll normally win every other trade and lose every other trade. Every now and then you will get a win streak of a couple trades, and every now and then you will get a losing streak of a couple trades. But even when you have a losing streak, this still works. Let me give you an example. Let's say that right here, you entered a buy when price came to the support zone. It broke below the support zone and you got hedged. So it came back up to retest the support zone as resistance. You now have a new trading opportunity. Just a break and retest of a support resistance level. Again, all I use is bounces of support resistance. That's literally it. I literally do nothing else, and you can see this all for yourself live every day in my free Telegram channel by clicking the first link in the description. I literally share all my chart analysis, all my markups, everything. You don't have to buy a single product from me or anyone else to learn this. This is very simple, straightforward stuff. It just takes experience. So with the support and resistance zones, price is either going to bounce at it or it's going to break and retest it. So let's say you entered a buy here and price broke and you got hedged and now you're waiting. The only reason under the sun that you mess with the hedge order at all is when price is at the next zone that you think it's likely to bounce at. Then what you can do is you can close the profitable or break even position and leave the other position on and let price bounce at the zone. Now let's say you close this buy at break even when it comes back to retest this zone. So you close that at break even, you're out. You stay in the sell thinking it's going to go down. You can simply put a new invalidation for that position just above. So now if this from here down to here was like a $5,000 risk, if it breaks the zone, well, you're only in a $1,000 hedged loss. And if it comes back up to the zone to retest, but instead of bouncing at the zone, if instead it just breaks right through it again and goes up to here, well, now you've incurred an additional $1,000 loss. Now you're hedged at $2,000 of loss. So now you've been wrong twice in a row. Price did not bounce here at the support level. And then whenever you managed the position when it came back to retest and you sold here, it did not bounce at that level. So now you have a 50% win rate, but you've had 2 trades and you haven't won. Well, guess what? Let's say price comes back to retest this zone as support again. What is going to happen? It is either going to go up or it is going to go down. That will always be the case. It does not matter what reasons you assign to why you think the market's going to do what the hell it does. You don't know why the market goes up or down. I don't know why it goes up or down. All we know for an objective fact as reality is that price does indeed go up or down. So it's not a question of why you should predict it or how you should predict it or how to get a good win rate or this and that. It is just a question of how can you profit from whatever happens to occur. This is how. If price comes back to hit this level, this is the third time, right? You took a buy, that was wrong. You got hedged. You took a sell up here because you closed the buy order at break even, you left the sell, and the sell was in drawdown, and it moved into more drawdown. You were wrong a second time. If price comes here a third time, and then finally, you've been wrong twice in a row on this third time. If when price gets to here, you simply close this sell at a small loss right there, this will be about $1,000 loss. If price does finally bounce here and pushes up and makes a higher high, once price gets back here to break even on this trade, you could close it there and you will have had a net $1,000 loss. Hell of a lot better than a $5,000 loss. What do? I am aggressive when it comes to this. Here's what I do. If this had happened where price said I bought at the support, price got hedged, came back to retest, I closed the buy at break even, it pushes up again, now I get hedged at a little bit bigger of a loss, $2,000 open floating loss instead of a $1,000 loss. When price comes to the zone, not only will I close this position here at a small loss of like $1,000, but I will add a second buy position, anticipating that price is likely to bounce there. And guess what happens if price bounces there? This will be the same lot size as the first position. If price bounces here, if it goes up to the first zone, if it goes up to the first hedge entry, then that means that I will make $1,000 profit on that. And having lost $1,000 on this trade down here, and then I break even on the first buy, everything would equal out to break even right there. But what does price do? Well, when price bounces at a zone and gets moving, it freaking bounces at the zone. So if this just goes and makes a higher high, not only was I able to mitigate the losses from the small losing position to a break even, but I was able to profit on this trade as well going up and this trade. This would be in this case about a $2,000 profit from here to here for that lot size from based on the original risk. And this second one would be about a $1,000 profit. So it would have been $3,000 in total profits from the buys minus a $1,000 loss from this one sell. We had to close at a small loss. And with that taken into account, it is a $2,000 net profit. And what was the win rate here? 33%. One out of the three trades finally won. And when it finally did win, you end up making a net profit. This is how I am able to viciously and aggressively trade. This is why I have a delusional level of confidence in trading, because it works. And it not only works for me, it works for the thousands of people that follow my content in my free Telegram channel and in my paid products. I'm not making any representation or guarantee or promise of results. I am just telling you the objective reality of what works for me personally and what I share. Of course, I'm fucking certain it works because I'm delusionally confident because I have been doing this and had 7 years of experience. And I continue to get better and better at trading to this day. That is how, with only a 50% win rate, I'm able to make money 90% of the time. I'm currently on a new account challenge where I'm taking I think it's a 7th account from $50,000 to $100,000. And this is actually a GBP account. I switched to a new broker, but this is an account that I will be taking to $100,000 again. And this is it. I just started this account this past week. Here's all the trades from the account. So there's the $50,000 deposit. It's actually GBP, so it's about 60,000 US dollars. The first week, it's about 300 in closed profits, and then some open drawdown in the actual terminal. So roughly still break even on the account, 49,600. So down $400 right now. This account, just like all the others, has a 95% chance statistical probability of getting to the growth target of doubling the account in a couple months using my compounding approach, which is nothing simple. It's nothing unique or new or crazy or wild. It is something that is so uniquely, ridiculously simple. Since I just use support and resistance, that is literally all I use. I teach this all in my compounding course. My website is below the first Telegram link in the description. But keep in mind, even I sell 3 products, a close friends group where I share all my trades live and like all the exact details of every single trade, and people can tag me, ask me questions. We do live sessions every day. I sell a comprehensive full program which teaches people from A to Z everything to get started. It's like Forex trading for beginners with unlimited one-on-one coaching from our team. And then I sell a third product, which is just my compounding course, which just teaches how I personally trade, and it comes with one personal mentorship session from me. And people can book additional ones if they want to purchase additional ones. But you don't have to buy a single product from me or anyone else to see that all you have to do to get and stay profitable consistently and predictably in trading is to keep things simple and control risk. This is not a baseless, unjustified claim. This is a claim that is grounded in evidence-based objective reality because I practice what I preach every single day in the free Telegram channel. If you're not in this free Telegram channel, I recommend that you just click the first link in the description right now because you have nothing to lose by just taking 5 seconds to go to this free Telegram channel where there's currently 41,000 people following my trades and analysis and everything that I share on a daily basis. I literally share everything in here. The only things I don't share is the exact trade management plan and entry because I have to save something for the paid clients. But aside from that, I share literally everything. I show you that it's working for other people who are learning from me. And again, past results do not indicate future performance. I cannot promise you anything. I'm not a financial advisor, not an attorney. I'm not giving you any type of advice that would require a licensed professional to give you. I am just showing you objectively what is the case for me and the people that are learning from me. That is it. It is just simple support and resistance. It is nothing else. It is nothing fancy. It is nothing complicated. It is nothing new. It is literally just support and resistance with a controlled risk management structure. I have taught you every single thing in this video that you need to know to go out and experiment with this on your own. You should trade a demo account since trading is risky and since most people lose money and since you are probably not the exception to the rule. It has been 7 viciously difficult years of trading for me. And even though today I trade very mindlessly because it does not take me more than 10 seconds to analyze a chart and draw 2 little stupid rectangular boxes for the support resistance zones, set 2 alerts, 1 at each zone, and just simply wait for price to get there. I barely do anything. I don't even wait for rejection when price gets to a zone. If price gets to a zone, the way I look at it is it's either going to bounce or it won't. Who the hell cares if it starts rejecting it or not? If it starts rejecting, you get a shittier risk reward. You get a worse entry. You have to have a bigger invalidation. It's harder to manage the trade if it goes against you, and you have to have a bigger potential for profit. So I don't even bother with the whole waiting for the candlesticks to set up at a zone, wait for it to reject. I don't even care. I draw the clear support resistance zones and I usually enter immediately about 90% of the time at the zone. If there's a lot of momentum going up into it, I won't enter immediately. But 90% of the time it gets to a zone, market's acting steady state, everything's normal, no crazy news events, I just enter immediately at the zone. Why? Because you have no better than a 50-50 chance of winning that specific setup. If I'm wrong, I hedge to the next zone. It might bounce at that zone. It's a 50-50 chance. When it finally bounces, I come out in a net profit on the basket of trades. Either a net profit, big profit, small profit, break even. That happens 90% of the time. And about 10% of the time, I'll take like a net loss, whether it's small or break even or a big loss that wipes out like a week or 2 of profits. That happens like once every now and then. It still does happen because sometimes you just get multiple hedges that continue to go against you and you just have to liquidate everything at a big loss. There is no way to avoid that. However, does that happen most of the time? No. With a 50% win rate, so long as you can delay and default on the loss until price gets to a zone where it's likely to bounce and you continue to manage your positions appropriately, it is not complicated to enter a buy at a support level or a sell at a resistance level if it moves into profit, which it happens half the time with you doing literally nothing. You set an alert where you'd like to take profit. Usually for me, it's around a 1-to-1 from whatever I was risking. That way, if I'm risking like 5K on a trade, I can at least make 5K potentially if it wins. Sometimes I'll close early. Sometimes I'll hold it a little bit longer. All depends on the context. But if you were literally buying at support and selling at resistance, then if it breaks past the support or breaks past the resistance, you just hedge. You set an alert at the next 2 zones, wait for the next zone. When it's at the next zone, you just manage the hedge in a contextually appropriate way. If you enter a sell at a resistance and then price moves up against you and it goes to the next resistance zone, well, you just hedge above the resistance zone you sold at. Then the buy will make profit as it goes to the next resistance zone. Close the buy and profit at the next resistance zone and then enter a second sell. You dollar cost average and you scale into the losing position thinking it'll bounce right there. If it breaks above that second zone, well, you just re-hedge again and you just wait for the next zone. You do this over and over. Eventually, when price bounces at a zone, which it will 50% of the time, you will make a net profit or a break even. And it will either be a huge profit, a small profit, or a break even. From my experience in my personal trading, 90% of the time. Again, I guarantee you nothing because most people lose money trading. Most people keep things so complicated and so convoluted that I have trouble understanding how they even sleep at night, because they're waking up at 3 a.m. checking their trade terminal for trades that they don't even know why they entered because it was so complicated, and their trading decisions are based on a series of abstractions that lead them nowhere except down frustrated paths of years and years and years of losing money, feeling like complete absolute dog shit because they're making zero progress, because they do not have a system that is simple and that has a clear risk management structure. I keep things simple and I control risk. And doing this with a 50% win rate, I have been able to have made millions of dollars over the past 5 profitable years of trading, doing exactly what I've told you here in this video. I have nothing more to tell you. I hope you enjoyed this video. And if you did like this video, you want more real videos like this, check the other videos out on my channel. You don't even have to like or subscribe or any of that shit. I just hope this stuff helps you. I wish I had learned this when I'd gotten into trading 7 years ago, because I lost money for a painful, long 2 years. I don't want that to happen to you guys. I care about the trading community and I deeply love this community. And I want everybody to have the best cards in their favor, because trading is hard, trading is risky. Most people lose money. You're probably not the exception to the rule. But for the people who take the things that I teach, I think it gives people a little bit more traction to start making progress more quickly so that people can actually get good results trading. Again, I guarantee you nothing and I promise you nothing. However, I hope this video, as well as the other videos on my channel, help you. I speak from a delusionally confident position because I know what works and I know what doesn't. I know that complexity is the beast that murders all people's confidence in trading. Getting stopped out over and over and over and over. Being told you have to have a 1-to-3 risk to reward ratio minimum to take a trade. Being told you have to have 3, 4, 5 confluences and trade smart money, liquidity, order block, bank manipulation, bullshit candle strategy to try to predict where the market's going to go with a huge 1-to-50 risk to reward. I have seen it all. I am here to tell you, not through arbitrary and abstract assertions, but through 100% evidence-based justified claims from my personal trading results, that all I do to make money trading is to keep things simple and control risk. If you do the same thing, I don't see why it wouldn't work for you, provided that you duplicate things in a contextually appropriate way. With that being said, I hope you enjoy the rest of your trading week. And I hope the content in my YouTube channels here on my channel helps you. And I do hope that you click the first link in the description to join my free Telegram channel with right now over 41,000 members who, for free, follow my daily setups and analysis. I practice what I preach and put my money where my mouth is every single day. I do not want people like you to have to struggle in trading when there is no reason for that to happen. Cheers to you and your trading journey. And I'll be less serious now. I hope you have a great rest of the day. I'm going to go ahead and do my analysis and finish up my coffee. It's a beautiful Sunday morning. I hope this video was useful. I'm going to go walk my dog, take my girlfriend out to a nice little breakfast. I'll see you guys in the next video. Hope you have a great rest of the day. Bye.